All right, let's jump into this deep dive. Today we're looking at the stock market.
Okay.
And I think something that's probably on everyone's mind
Yeah.
is, how to make smart moves when things feel a little bit shaky.
For sure.
And to help us with that, we're going to unpack some expert advice
Okay.
from a seasoned investor with 35 years of experience.
Wow, 35 years in the market. I mean, they've seen it all.
Exactly.
That's a goldmine of knowledge right there.
Yeah, and they kick things off with a dose of reality.
Okay.
Trying to predict the market's short-term movements
Right.
is basically a guessing game.
Yeah.
50-50 chance you're going to be right.
It's so true.
Yeah.
What I think is so fascinating about this investor is that instead of focusing on those, impossible to predict short-term swings,
Right.
they emphasize understanding the economic cycle
Uh-huh.
and thinking about, where we are right now with inflation and interest rates.
Yeah.
That gives us a much better framework
Okay.
for making investment decisions.
So it's less about kind of, like looking into a crystal ball and trying to see the future. It's more about saying, okay, here's where we are.
Yeah.
And just kind of using that to make some educated guesses.
Exactly. And this investor believes right now that the economic cycle favors falling interest rates.
Okay.
And why is that significant for you as a listener? Because when interest rates fall, that often creates a more favorable environment for stocks.
Okay. I see where this is going.
Yeah.
So even though things feel uncertain, like we can look to that broader economic cycle for some clues
Right.
about potential opportunities.
Yeah, exactly.
But what about the specifics of the current economic outlook?
Yeah.
I know you've been digging into the source's thoughts on the Brazilian market.
Right. And they acknowledge that, trying to predict the future of any economy is tricky.
For sure.
But there are some positives for Brazil, like its strong external accounts
Okay.
and the expected, wave of infrastructure investment.
Those do sound promising.
They are.
But I'm guessing there are also challenges.
Of course, there always are.
Okay.
The source points to higher interest rates, which we already touched on,
Right.
and a degree of fiscal uncertainty.
Okay.
Both of those could impact how the economy performs.
Yeah, it's a balancing act, right?
It is.
You're weighing the potential upside against those risks.
Exactly.
So we've got this economic backdrop.
Yeah.
But where do companies fit into all this?
Okay.
Our source seems to be focusing on businesses
Yeah.
that can thrive even after crises, not just survive them.
Right. And they highlight something called pricing power.
Pricing power. Okay,
Yeah.
break that down for me.
Yeah.
What is pricing power and why should I care as a listener?
Essentially, pricing power is a company's ability to raise prices without losing customers.
Okay.
Think about like those brands that you're loyal to.
Yeah.
The ones where you would still buy their product even if it cost a bit more.
Okay.
These companies often have a dominant position in their market, or they offer something unique that's hard to find elsewhere.
So if I'm looking to invest, I should be seeking out companies with strong pricing power
Yes.
because they're the ones that can kind of weather those economic storms
Got it.
and come out stronger on the other side.
Exactly. And they give some really great examples, like companies with fiercely loyal customer bases, or those with truly unique products, or companies that just have a real knack for outmaneuvering their competition.
Now it's all starting to click, but our source also mentions something about stock valuations being at the low end of a historical range.
Right.
What does that mean for someone like me trying to understand the investment landscape?
Well, that ties back to the economic cycle we talked about earlier.
Oh, okay.
When interest rates peak, like they have recently, it often puts downward pressure on stock prices.
Okay.
And this creates a situation where valuations, the price you pay for a company's earnings,
Right.
become more attractive.
So does that mean it could be a good time to buy, even though things feel a little shaky?
Well, the source tells an interesting story about an investor meeting.
Okay.
And someone was arguing that high interest rates made stocks unattractive. And ironically, the very next day, the market surged. Some stocks jumped 10% to 12% in a single day.
Wow. That's a pretty dramatic example of how quickly things can change.
It is.
But I guess it reinforces the point that what seems unlikely in the market can happen.
Right. Yeah.
And those unexpected turns can create some big opportunities.
Absolutely. And the source's core argument kind of builds on this.
Okay.
They believe that market risk is actually at its lowest point right now,
Interesting.
even though it feels risky.
Okay.
And their reasoning is that because prices are down
Uh-huh.
and fewer investors are in the market, there's less potential for a massive sell-off.
They call this a wall of worry, right?
Right. That wall of worry
Okay.
can make investors hesitate even when valuations are attractive.
So for those willing to kind of climb over that wall,
Yeah.
look beyond the fear,
Right.
could be some real gems waiting on the other side. So it's almost like a contrarian approach.
It is.
When everyone else is panicking, that's when the savvy investors start to see potential.
Yes.
But are there any real-world examples of this playing out?
There are.
Okay.
The source points to some compelling case studies from the Brazilian market.
Okay.
Companies like Toctafis, Localiza, Lojas Renner, BTG Pactual.
I've heard of some of those.
Yeah.
Okay.
All companies saw their stock prices plummet during various crises,
Wow.
only to rebound strongly afterward.
So these are examples of companies that not only survive tough times,
Yes.
but use them as a springboard for future growth.
Absolutely.
That's encouraging,
It is.
especially for someone like me who's, trying to navigate a market that feels uncertain.
It all circles back to those resilient companies we were talking about.
Right.
The ones with the strong fundamentals and that all-important pricing power.
Okay.
Now, while the source highlights these successes, they also provide some cautionary advice
Okay.
on what to avoid doing during turbulent times. These are their 6 don'ts for investors.
Yes, those 6 don'ts.
Yeah.
I think this is where the advice gets really practical.
Right.
So let's break those down one by one.
Sure.
What's the first thing investors should avoid doing, especially when emotions are running high?
The first don't, and probably the most tempting one, is don't panic sell after losses.
Oh, tell me about it.
We've all been there, right?
Yeah,
You see your portfolio drop, and that fight or flight response kicks in.
it does.
But instead of selling out of fear,
Yeah.
our source suggests considering a strategy called rebalancing your portfolio.
Okay, you're going to have to explain that one.
Sure.
What does rebalancing actually involve?
So rebalancing is essentially about adjusting your investments
Sure.
to maintain your desired level of risk.
Got it.
So let's say one part of your portfolio has taken a bigger hit than others
Uh-huh.
during a market downturn.
Okay.
You might consider selling a bit of the investments that are still doing well,
Right.
those winners, and using that money to buy more of the investments that have dropped in price.
The losers.
The losers, yeah.
So it's a way to kind of capitalize on the downturn
Yeah.
without completely abandoning your overall investment strategy.
Exactly.
You're essentially buying low and selling high, but within your own portfolio.
Right.
Okay.
And that brings us to the second, don't.
Okay.
Don't become overly defensive and abandon growth stocks altogether.
In other words, don't let fear drive you to only invest in super safe, low growth options.
Right. It's about finding that balance between protecting your capital,
Okay.
but also allowing for the potential for higher returns.
Yeah.
Growth stocks, while they can be more volatile,
Right.
often have the potential to deliver greater returns over time.
Makes sense. I'm definitely taking notes.
Good.
What's the next don't on the list?
This one is all about mindset.
Okay.
Don't let mistakes crush your confidence.
Oh.
Learn from them.
Yeah.
Investing is a journey, and everyone makes mistakes along the way.
That's so true.
It's how you respond to those mistakes that really matters.
It's easy to get discouraged when things don't go as planned.
It is.
But those setbacks can be incredibly valuable learning experiences.
Absolutely.
Yeah.
And our source encourages investors to view those oops moments as aha moments.
I like that.
Yeah.
Okay, what's the next piece of advice on the don't list?
This one might seem a little more like general life advice, but it applies equally to investing.
Okay.
Stay calm, maintain a positive mindset, and work together.
It's about staying level-headed and focused,
Yeah.
even when the market feels like a roller coaster.
Exactly. And if you're working with a team or even just bouncing ideas off other investors, maintaining that collaborative spirit is crucial.
I like that. It reminds me of that saying, if you want to go fast, go alone.
Yeah,
If you want to go far, go together.
I love that.
What's the next don't on our list?
This one is about remembering the human element of investing.
Okay.
Don't lose faith in companies, but reinforce your long-term vision and support those with a long-term vision.
Yeah.
It's easy to get caught up in the numbers,
Right.
but behind every stock ticker are real people
Right.
running businesses,
Yeah.
navigating these same uncertainties.
It's a good reminder to focus on those companies that have a clear long-term plan,
Yeah.
not just those chasing short-term profits.
Exactly. And that leads us to our final don't.
Okay, hit me with it.
Don't let fear paralyze you.
Oh.
Take calculated risks based on research.
Yeah.
This is where doing your homework really pays off.
Right. It's about doing your due diligence.
Yes.
Really understanding the companies you're considering investing in.
Yeah.
And making informed decisions based on research.
Yes.
Not just on gut feelings or market hype.
You got it.
Welcome back. Before we went to commercial, we were unpacking some really practical advice from our seasoned investor.
Right.
Especially those 6 don'ts
Yeah.
to help us avoid common mistakes when the market gets turbulent.
It's all about staying calm, thinking strategically,
Right.
remembering that investing is a marathon, not a sprint.
Exactly. But through all of this, I'm curious, what's the overarching message?
Okay.
What's the key takeaway? Our source is trying to drive home.
Yeah.
For someone like me who's trying to figure out how to approach the market right now.
At its core, they believe that smart investing boils down to finding great companies at attractive prices.
Okay.
And right now, they argue that the current landscape offers just such an opportunity.
Okay. I'm following you, but I think some folks out there might be thinking,
Yeah.
wait, prices are down because things are uncertain.
Right.
Isn't that a sign to stay away?
Yeah.
How would you address that concern?
That's a great question.
Especially in light of the wall of worry concept we discussed earlier.
Yeah. And it gets to the heart of what makes this seasoned investor's perspective so interesting.
Okay.
They're essentially saying that this wall of worry, this fear that's keeping many investors on the sidelines, is actually creating an opportunity.
Okay.
Because when fewer people are buying,
Yeah.
you can push prices down even for companies with solid fundamentals.
So it's like a hidden treasure map.
Yeah.
For those who are brave enough to kind of look past the immediate fear, those who understand that market downturns, while uncomfortable, can also create buying opportunities.
Precisely. Remember those Brazilian companies we talked about earlier?
Yeah.
The ones that experienced those massive drops during past crises, only to rebound even stronger.
Right.
Those are prime examples.
Tortevez, Localiza, Lojas Renner, BTG Pactual,
Take that.
they all demonstrate that what looks like a disaster in the short term can actually be a springboard for long-term growth.
It can.
If you choose the right companies and have the patience to ride out the storm.
Exactly. And it all comes back to identifying those resilient companies with strong pricing power.
Right.
The ones that can not only weather economic downturns, but actually use them to their advantage.
Okay, so far we focus mainly on the Brazilian market.
Right.
But I'm wondering if these principles, these don'ts, and the idea of a wall of worry creating opportunity, are they specific to Brazil?
That's a really interesting question.
Or could they apply to other parts of the world?
Our source primarily focuses on Brazil.
Okay.
But the underlying concepts they discuss are rooted in timeless investment principles. You know, the economic cycle,
Right.
investor psychology, the importance of valuations.
Yeah.
Those dynamics exist in markets all over the globe.
So while the specific examples might differ,
Right.
the broader lessons about staying disciplined, focusing on the long term, and looking for value amidst uncertainty
Yes,
are universal.
absolutely.
Yeah.
And I think that's a powerful takeaway for our listeners.
Yeah.
You can apply these principles to your own research and decision-making,
Okay.
regardless of where you choose to invest.
I'm starting to see how this deep dive into the Brazilian market can actually provide a framework for understanding markets anywhere in the world.
Yeah.
It's about connecting those broader themes to your own unique investment goals and risk tolerance.
Exactly. And I think it's important to acknowledge that we've only scratched the surface here.
Yeah.
This deep dive is meant to spark your curiosity, to give you a foundation
Okay.
upon which to build your own knowledge and make informed investment decisions.
It's like we've given you a starting point, a map,
Yeah.
but it's up to you to explore the terrain, to do your own research,
Right.
to ultimately chart your own course through the market.
And that journey of exploration is what makes investing so fascinating.
Yeah.
There's always something new to learn,
Mm-hmm.
new insights to uncover, new strategies to test.
Speaking of which, we've covered a lot of ground.
We have.
Maybe it would be helpful to just recap some of the key concepts we've discussed so far.
Absolutely. So to recap first,
Yeah.
we talked about the importance of understanding the economic cycle
Okay.
and how it can influence investment opportunities.
Second, we highlighted the power of pricing power
Yes.
and why identifying companies with this ability is crucial, especially during uncertain times.
Third, we explored the concept of the wall of worry, how fear can actually create advantageous situations for those who are willing to look beyond the immediate headlines.
Fourth, we emphasized those 6 don'ts for investors.
Right.
Those timeless principles of staying calm, avoiding emotional decisions, and focusing on the long game.
And throughout our discussion, we've woven in real-world examples from the Brazilian market
Yeah.
to illustrate how these concepts play out in practice,
Right.
demonstrating that even amidst crises, there's potential for growth and opportunity.
You've done a fantastic job of summarizing all of that.
Thanks.
And I think it underscores the point that even though the market can feel unpredictable and even scary at times, there are frameworks and principles we can use to navigate it with more confidence and clarity.
Exactly. And as we move into the final part of our deep dive,
Okay.
I want to shift our focus to the individual investor.
Okay.
What practical steps can someone like you take
Yeah.
to apply these concepts to their own portfolio and decision-making process?
Okay, so we've covered, a lot of ground in this deep dive.
We have.
From the broad economic landscape to like specific company examples.
Right.
Now I'm ready to get down to brass tacks.
Okay.
What are some actionable steps I can take to actually apply all of this, to my own investing?
That's the million-dollar question, isn't it?
It is.
It's one thing to understand the concepts,
Right.
but it's another to actually put them into practice.
Right.
So let's break it down.
Perfect. Let's talk strategy.
Okay. Well, first, I'd encourage you to revisit your investment goals.
Okay.
What are you hoping to achieve with your investments? Are you saving for retirement, a down payment on a house, or something else entirely?
That makes sense. Having a clear goal in mind can help guide my decisions.
Absolutely.
And keep me focused, especially when the market gets a little bumpy.
For sure. And once you have those goals in mind, you can start thinking about your risk tolerance.
Okay.
How much volatility are you comfortable with?
Yeah.
Are you someone who can stomach big swings in the market, or do you prefer a more conservative approach?
That's a good point. I tend to get a little anxious when my portfolio takes a dip.
Yeah.
So maybe a more conservative approach would be better suited for me.
It's all about finding that right balance for you. And remember, risk tolerance isn't just about your personality. It also depends on your time horizon.
Okay.
If you're investing for a long-term goal, like retirement, you can afford to take on a bit more risk because you have time to recover from any short-term losses.
So someone with a longer time horizon might be more comfortable riding out those market dips,
Right.
knowing that over time the market tends to go up.
Exactly. But if you're investing for a short-term goal,
Yeah.
like that down payment on a house,
Right.
you might want to opt for a more conservative approach
Okay.
to minimize the risk of losing money right when you need it.
Okay, that's starting to paint a clearer picture for me.
Good.
So once I have a good grasp of my goals and risk tolerance,
Yeah.
what's next?
Okay.
How do I actually go about finding those great companies at attractive prices?
This is where the real work begins. It's about doing your research, digging into company financials,
Okay.
understanding their business models, and assessing their competitive landscape.
That sounds like a lot of work.
It can be.
Where do I even begin?
There are a ton of resources available to help you.
Okay.
Financial websites, investment publications,
Uh-huh.
even company investor relations pages can provide a wealth of information.
Right.
And don't forget about those trusted financial advisors we mentioned earlier.
Yeah.
They can be invaluable resources, especially if you're new to investing.
Right. They can help me kind of sort through all the information.
Yeah.
Make sense of it all.
Exactly.
But I'm curious about the wall of worry concept we discussed earlier.
Yeah.
How can I use that to my advantage?
Well, but recognizing that fear and uncertainty can create opportunities.
Okay.
When the market is down, it's easy to get caught up in the negativity.
Right.
But that's often when some of the best bargains are to be found.
So instead of panicking and selling, I should try to view those downturns as potential buying opportunities.
Exactly. But remember, it's not just about buying any stock that's down.
Right.
It's about finding those high-quality companies with strong fundamentals that are temporarily undervalued because of market sentiment.
So I need to do my due diligence.
Yes.
Make sure the company is actually a good investment, not just a stock that's down because the company is struggling.
Exactly. Look for companies with strong balance sheets,
Okay.
consistent earnings growth, and a competitive advantage in their industry.
Got it.
Those are the ones that are most likely to rebound when the market recovers.
Okay. I'm starting to feel more confident about how to approach this,
Good.
but I'm also mindful of those 6 don'ts we discussed earlier.
Yeah.
How can I use those to guide my decision-making process?
Those don'ts are your guardrails.
Okay.
Your reminders to stay disciplined and avoid common pitfalls.
Uh-huh.
Remember, don't panic sell just because the market is down.
Right.
Instead, consider rebalancing your portfolio. As we talked about earlier,
Yeah.
don't let fear drive you to abandon growth stocks altogether.
Right.
Find that balance between risk and reward.
Okay.
And most importantly, don't let mistakes crush your confidence.
Yeah.
learn from them,
Right.
and use those lessons to make better decisions in the future.
Those are fantastic reminders. It's so easy to get emotional
It is.
when it comes to investing,
Yeah,
but those don'ts can really help me stay grounded,
absolutely.
focused on my long-term goals.
And remember, investing is a journey. There will be ups and downs along the way.
For sure.
But by understanding the principles we've discussed, doing your research, and staying disciplined,
Right.
you can navigate the market with more confidence and ultimately achieve your financial goals.
I really appreciate all of these insights.
Of course.
This deep dive has given me a whole new perspective on how to approach investing. I feel more prepared to face the market's challenges and to seize the opportunities that come my way.
That's what we hoped for. Remember, knowledge is power, especially when it comes to investing. Keep learning, keep exploring, and never be afraid to ask questions.
That's great advice. And to all of our listeners out there, remember, you don't have to be a financial expert to be a successful investor. It's about taking the time to learn, making informed decisions, and staying committed to your long-term financial well-being.
Well said. And until next time, keep diving deep and happy investing.